Hi, it's Sunday, February 28th, 2016. I'm going to talk about a few subjects today. I'll start out with a Daily Telegraph story that came out over the weekend. And the headline is, "World Economy Stands on the Cusp of Another Crash," warns Lord Mervyn King. Mervyn King was governor of the Bank of England before Mark Carney, and yeah, he was governor for about 7 years or so, I think. And he was governor, actually for about 10 years. He was governor during the 07-08 crisis. Basically, he's come out with a new book. It's coming out in the beginning of March. It's called The End of Alchemy. And basically, the former governor of the Bank of England is coming out with things people like me and others have been saying, that, the financial system was not, reformed, restructured. The banking system is still in the same boat as it was before the crisis, if not even worse. And he actually has come out and said that in his new book. I guess he wouldn't have said that while he was Bank of England governor, even though I do remember him saying just before the end of his term that one option would be to go back to 100% reserve banking, and abolish fractional reserve. So Mervyn King is intellectually honest, in my opinion. I guess he is part of the system, but this book now coming out, he's basically saying, the system, in order for the world economy to recover, things have to be changed. I haven't read the book; it hasn't come out. I'll probably buy the book and read it. And he's basically saying that we need a new financial and monetary system and banking system. So this is quite interesting, and he says that we're in the cusp of another crash, and he thinks it's going to be sooner rather than later. The other thing I wanted to talk about is about the G20 finance ministers and central bank governors meeting that was held this Friday and yesterday in Shanghai, China. And leading up to this meeting, the markets rallied with the expectation that these policymakers would come out with a big plan to help the world economy, not only monetarily but fiscally. But basically they haven't. So, excuse me, there's an article in Zero Hedge. It says, "Markets at risk as tepid, uninspiring G20 proves investors' hopes were pure fantasy." So nothing came out of this G20, nothing concrete at least. So, will be interesting to see what happens to stock markets, bond markets, precious metals markets coming up, this next week. So one of the quotes in this article says, and I quote, "Investors' hopes of coordinated policy actions proved to be pure fantasy," said TCW's David Lovinger, a former China specialist at the U.S. Treasury. It's every country for themselves. So this meeting seems to have been a waste of taxpayer money, if you ask me. So the last subject I want to talk about, and it's a subject that a lot of my subscribers, like, and I'm also interested in, is gold. And it was, last week was a consolidation week for gold. Since we touched that level at 1264 a couple weeks ago, gold has been basically, consolidating in a triangle or pennant formation, whatever you want to call it. And as you can see, we topped at 1264 and we went down to 1190, and then we went up again to around 1253, if I'm not mistaken. And then on Friday, gold was doing fairly well, but we dropped during the middle of the U.S. trading day down to around 1211, and that almost touched, as you can see, the lower part of the triangle. So I don't think there's anything negative going on for gold at the moment. We're only seeing a consolidation after a big rally from that low in January at 1070, all the way up to 1263. So we're still consolidating, and the way a triangle works in technical analysis is that roughly 75% of the time it's a basically it's a continuation pattern, and the triangles where you have the consolidation, and 75% of the time the triangle will lead to a move that mirrors the move prior to the consolidation, and that happens about 75% of the time when you see a formation like this. So as you can see, we had the top, and then we had the A down to 1190, and then B up to 1153, or 2, sorry, 1, 2, and then 3, let's say, was 1211 on Friday. And then on the fourth go up, we should break the top of the triangle, and it looks like it could go on for another few days, maybe even a week or so, but we're close to the apex of that triangle, so we should break out soon in gold, and 3 out of 4 times the breakout should be upwards. And the target for that triangle formation in gold, as you can see, is roughly around 1430. I've taken the length of the first leg and then moved it up where it breaks out, where it roughly breaks out, and it takes us all the way to around 1430 in gold, 1430, and that could happen within the next 6 weeks, I'd say, or even next month. Anytime end of March, I think, and beginning of April, we could reach that level. So it still looks good technically, the price of gold and the movement of the charts, and we'll have to see what happens in terms of the stock market next week. I think we could be headed for a difficult time again in the stock market, even though we've been rallying since the 11th of February. I think bear markets are a bit like bait and switch. They lure you back onto the market, these rallies, and then all of a sudden the market turns and makes new lows. So I would expect, the stock market to probably turn around soon, and gold break out and reach that objective 1,430. Have a good end of the week, and I'll talk to you soon. Bye.